Hello and welcome to Kotak Securities Weekly Fundamental Podcast. I am your host Rini Mehta. Stock markets globally and in India continued to digest global events including the ongoing Russia-Ukraine conflict, rate hike by US Fed and other central banks, and rise in COVID cases in some countries. Stock markets in India remained range-bound last week with BSE midcap and small cap index outperforming the larger indices. Supply-demand imbalances across various commodities are leading to investor interest in select stocks and indices. Guys, BSE Metal Index touched a new 52-week high this last week. Oil and Gas Energy Index too outperformed other key sectoral indices. FMCG and Bank Index declined on a week-on-week basis. What investors are tracking closely these days is also crude oil prices. So guys, crude oil prices may have corrected from the recent highs but is still at elevated levels. Given uncertainty with respect to the Russia-Ukraine conflict, oil prices and few commodity prices could likely stay volatile and elevated. Now if we look at foreign investor interest, FII flows continues to remain negative in the month of March till date. They were net sellers to the tune of rupees 45,453 crores and are moving to safe haven. Given multiple headwinds like inflation, elevated crude oil prices, as I said, geopolitical issues, etc., we believe FII flows to India will remain volatile in short term. Other than Thailand and Indonesia, all other emerging markets witnessed outflows till date in the month of March. Now moving on to stock ideas from our research desk. You can consider buying Aster DM Healthcare with target of rupees 230. Guys, in a recent meeting, Aster DM reiterated a strong medium-term India outlook while guiding for a healthy trajectory in Gulf, that is GCC. Value unlocking plans are on track with Saudi sale likely soon, followed by GCC restructuring in the next 6 months. At current market price, the stock is trading at implied FY24 EV by EBITDA multiples of just 9 times and 5 times for India and GCC respectively. With a sharpened India focus and restructuring in the offing, there is certainly room for re-rating. So we maintain buy on the stock. Finally, our pick of the week is IRB Infra with target of rupees 325. The company is entering into strong growth lane. Results were in line with our estimates as the quarter witnessed healthy order wins and financial closure of projects. The company is entering into a strong growth trajectory with healthy visibility on construction revenues, sharp uptick in toll revenues driven by improved traffic and toll rate hike, sufficient growth capital for incremental order wins and reduced debt. GIC and Sintra's presence will further enhance technical expertise and practices in line with global standards for the company. So we retain buy with a revised fair value of rupees 325. Guys, that's all for today. If you like the podcast, don't forget to follow us and subscribe to our channel. See you again next week. Thank you. Signing off.